Let's take a look at some DeFi charts and information here on this fine Wednesday at the end of October, the first month in Q1. What a sheer display of bullishness it has been from BTC, the Chad leading the way. I want to start with talking about TVL and lending and borrowing. TVL net value, this is very important. Not looking at gross, not looking at what most websites other than the bank display as TVL, is at an all-time high. So this is actual value. This isn't double counted, triple counted. You can see the duplicate ratio here is 25%. A lot of websites fail to inform you of that information and make it look rosier than it is, but this is still quite bullish to see TVL where it's at. Now, a lot of this is underlying token appreciation. That's fine. This will not necessarily translate into token value for the protocol. It's very bullish for DeFi protocols. It is not necessarily bullish, or at least has not been. It has not been a one-to-one correlation with token prices. For instance, the current leader, according to the bank, in value is Maker. The worst chart on technicals that I'm about to show you is Maker. This chart looks abysmal. This chart looks at risk for much lower lows than it currently is sitting. Curve, on the other hand, is the best looking chart I'm about to show you, in that it is well above its range, well above levels it needs to get above for very likely mega higher highs. Aave also looks very good. Compound does not. Uni looks okay. Sushi looks not so great. SNX not so great. You can go down this list and compare the technicals, and it does not line up. It is not one-to-one. There is no correlation in my mind with the technicals of the underlying token and TVL. Another chart that exploded today was 1 inch to the upside. They have no TVL whatsoever relative to the big boys here at multi-billions, right? You can also look at TVL across everything. I'm just looking at Ethereum. For me, that's sort of the leader in DeFi projects at the moment. But you can go through this list, do these comparisons, and look at it. It doesn't line up. So yeah, it's bullish for the protocol. That's not necessarily bullish for the token. Lending and borrowing also pushing towards all-time highs. I'm only focused on Ethereum and Maker, Compound, Aave. Those are really the only ones I care about. If you include everything, we're well past all-time highs in lending and borrowing. So it's important to look at this. It's important to look at what are the rates and fees and whatever else that's going on these platforms, because at some level, there's a tipping point where the borrow rate surpasses the likelihood of levels where you get an ROI, right? If the borrow rate, just like funding on exchanges, if it's some crazy level where, unless we're just straight vertical, you're not going to make any money, that's going to slow things down a bit. That's potentially where we're at right now, why things are pulling back a little bit. But I'd have to look at funding a little bit more closely. But it didn't look too out of whack yesterday. But I think this generally is just bullish for lending and borrowing. And DeFi, again, this doesn't translate to token value, right? I think people really, I don't know. I think people overvalue TVL, overvalue lending and borrowing because they think it's automatically going to translate into token value, when that most certainly is not the case. So looking at the technicals, this is the DeFi perp. This is an index of DeFi coins on FTX. And I've been tracking this since, February, March, watching this thing snake in and out of this range, watching this thing sort of triple bottom, fall off the table, right, go in and out of the 200-day moving average. Where it sits now is the best it's looked since November last year, right? It's had a year of sideways after February, basically. So not a year exactly, but lots of consolidation, lots of volume in this range. And the most important thing here is we need to stay above the cloud. We need to stay above the 200-day moving average. And ideally, we stay above all of this volume congestion. Just as we had issues in this level, you have people who are buying above this volume or buying at this volume. And when price goes against them, they are trapped. So they either have to panic sell, or when price reaches those levels again, they're happy to get out of break even, which is just the basic understanding of resistance or support at that point. So to see us above this is extremely important. To see the cloud have a bullish TK cross above the cloud, the most bullish signal in the cloud system. I'm still highly confident this can stay bullish on aggregate in the index. I would very much like to see 11.6 be support on this index. That's the Kijun, that's the first notch in the VPVR. If we start swirling around down here, it's not the end of the world. It's just a much messier trajectory, because then you get back into the support resist question. You get back into, will we hold at the 200-day moving average? You know, there's all sorts of problems, right? Just like we had here where we had this springboard above, retraced back to the 200-day moving average, and then it was a question of, are we actually going to hold, right? I don't want to get to that point. Right now it looks fine, things look fine. You don't want to get below 10.5 or whatever that is on the 200-day moving average. So to me, that still looks good, just like last week. Like I mentioned earlier, Maker looks like it is in a ton of trouble. Now, I hope I'm wrong on this because I'm holding Maker. I've been holding Maker for a long time. And I'm still going to continue to hold it on my personal account on Enzyme, where we trade for Technical Capital. We only have like 2.5% allocation in this, and it's likely going to be cut sooner rather than later. But just looking at this diagonal trend line, that's your first clue. And to me, that's the biggest issue with holding this long term. It's below the VPVR levels. It's below the 200. It's below the cloud. There are no bullish factors here whatsoever. Nothing. There's no bull div. Volume is still flat. Like, there's no capitulation. This could easily go down to 15 or less, or 1500 or less. Does that match TVL at all? No, it does not. You'd have no clue that TVL was where it was based on this chart. Now, if burning starts kicking up again on the tokens, that may save this. And I certainly hope it does. But trend metrics right now, technicals look probably the worst that they've looked since pre-2021, when it was just stuck in that range. If this does turn a corner, it starts to get bullish again at basically 3K, because then it'll be above the 200, it'll be above the cloud, it'll be above the volume. It'll have some issues getting out of the 3K range to 4K, but it'll look much better than it does now. This looks atrocious, terrible. You'd have no idea that TFI as a whole is pretty bullish right now. Avi, on the other hand, looks quite bullish. You're getting a 5200 crisscross here, bull cross soon, price above the cloud, getting back into this volume area, establishing 300 as support. This mini ascending triangle sort of playing out to the upside, and you're getting what I think is real volume. Sometimes TradingView doesn't display the volume on Binance correctly, so I haven't triple checked this anywhere, but I think this is a real volume candle. Pretty massive breakout. This is what you want to see. You want to see a chart pattern form. You want to know what the bias is, and then you want to see an on volume breakout, which is what this is. On top of that, you're getting an on volume breakout, on volume Kumo breakout in the cloud. So to me, this is one of the better looking charts out there. No bear div yet on RSI, not even oversold yet. So that looks great to me compared to Maker. Comp is more in the Maker category, where it's just on the struggle bus. It is in traffic on the struggle bus. It is at support here. It needs to turn around. Otherwise, this thing's going to get in trouble fast when it starts breaking lower lows. I like 200 to 220 if it does break lower lows here. Basically a retest of the previous low. Not really much else to say. This thing is kind of an ignore for me until it's above 500, 450, 500. Something else that I'm considering reducing position sizing on Enzyme because it looks sort of abysmal. SNX, not as terrible looking as comp, but it is bearish on trend metrics, still below the 200 below cloud. If it does break lower lows, that's another reason to cut this. Anything below 950, 9, whatever that is. If this makes a lower low, if any of these make a lower low, then you're in trouble. You don't want to make lower lows in a bull market. You don't want to make lower lows if you're holding something, right? Unless you expect this to just get crippled over multiple days price wise. That's fine, if you're expecting downside here. I'm not expecting downside here, which is why that's a reason to cut it. Uni still looks okay, much better than SNX Maker, whatever else. Still working on its breakout on the cloud. Still above the 200, still above the cloud in the VPVR stuff here, right? So still bullish, but more neutral than anything. Looks fine to me overall. I'm still holding that personally as well. Sushi neutral flat. Again, you'd have no idea that Uni has the TVL it does based on this chart. You'd think the chart would be, mega at all-time highs, right? Based on protocol revenue, you'd think Uni is going to explode in token value. No, doesn't matter. Probably will never matter. This is all speculation. This is all pure speculation. You could have no idea what Uni does. You'd have no idea what DEXs do. And you could just trade the chart, and that's fine. I think it's just so divorced from what's actually going on the price side of things. It doesn't even matter. Sushi, flat, neutral, above the 200, below the cloud, in the volume stuff, right? This does not look bullish. Specifically, it doesn't look bearish, doesn't look anything. Just, just avoid it until it's above 1250, I guess. I don't know. The whole thing's a giant mess. Just look at this range from 7 to 20. I mean, have fun trading that and keeping your sanity especially if you're on leverage. It's just much easier to trade stuff that looks like Aave or that has a breakout, right? Now, if this starts to break out, sure, like it looks fine to me, but right now it just looks neutral. Now, here's a chart that I talked about last week. A lot of people have been talking about this. Curve looks phenomenal. This is effectively an all-time high if you exclude the initial listing where the data basically isn't real anyway. RSI isn't oversold or overbought, not yet. Bull diving, volume looks fine. There's a key June support here at 350. Basically, if you missed everything from 250 on up, I like 350 as a rebuy. That's also the range high over here. It's also the VPVR support. So plenty of reasons to buy 350, but I think this cycle is going to do quite well, potentially 20, but we'll see where it goes. Curves taking off, very likely due to the supply changes with the token. That seems to be the most impactful thing. Burning, not minting, lockups, that sort of thing. Just basic supply demand principles. Balancer is starting to look better and better, similar to Aave. It's got this ascending triangle breakout, very close to getting above the cloud, above the 200, above the VPVR. I like this level right here, if this does break out at 45, 47, whatever that is, because it's the 50% retracement from the all-time high to the local low here. Volume looks good, RSI looks good. I really like this as a very close watch list item. This is something I'd be watching every day if I was actively trading it because it looks very good. BNT looks a lot like Uni, had its mini breakout, still kind of working on figuring out what it wants to be when it grows up. But this looks like it wants higher highs eventually. It'll go when it wants to go, just like Uni. But the charts should act exactly the same. They look exactly the same. Still on the bullish side of neutral, so everything looks fine on that side of things. ZRX, just neutral, flat. Not above the cloud, not above the volume. I think there's just better charts to trade than ZRX. I generally would just avoid this entirely. I think it has limited upside because of the token not having a use case. At least Uni and all these other tokens have somewhat of a use case. ZRX probably has the thinnest use case of anything in DeFi. Again, love the protocol, use it all the time. Token makes no sense to me whatsoever, right? This is just speculation, pure speculation. So if this starts to flip bullish on trend, yeah, I love it. But right now it's more neutral. 1 inch, I have no idea why this exploded today. However, the cloud did tip you off a week ago. Now, this is why I always talk about cloud breakouts, price above the 200, blah, blah, blah. Like I say the same thing over and over again. My analysis is always the same because eventually on one of these, you're going to hit 777s, right? And you're going to have a 200% breakout on a day or whatever this was. Just insane. Again, this volume, I think it's real. I don't really know for sure because it's on Binance and TradingView sometimes reads that incorrectly. But this did have, just like Uni, just like BNT, kind of hard to see on candlesticks, but this did have an inverted head and shoulders into a Kumo breakout, into a break above the 200, into a break above the VPVR, into a break above the volume range, and then it even retested that range as a throwback on lower time frames. So there was plenty of reasons to be buying and holding this and be longing this, and in Enzyme, it was our number one allocation, and it definitely paid off today. As far as higher highs, sure. Funding is going to be super high in the moment. I think it's going to take some time. It's going to need to probably range a bit at these highs, establish support, but it looks fine. Again, I don't know why, other than technicals, this thing is up 100%, right? I have no idea. I tried looking. If you know, let me know in the comments. Melon at diagonal support here, below the cloud, above the 200, above VPVR. Volume sort of waning. Doesn't look terrible. Looks neutral. Definitely needs to hold this level. So I'd be watching that pretty closely. And then Link just kind of looks milk toast average. It doesn't look like anything in particular. It's above the 200. It's above the 365 MA. It's below the pitchfork. If this thing can get back in the pitchfork, I do like $80 as a target this cycle. One of the influencing factors here for Link is the team is continuing to sell several 100,000 tokens per month. Now you can say to me, they need that for biz dev. It's not an impact on monthly trading volume percentage. That's fine. You're correct. You're 100% correct, right? I love the protocol. I use it all the time. DeFi would not be where it is without Link, the protocol. Oracles are immensely important. They're the reason DeFi is here. But again, the token, not so sure, right? It had a good run. Be happy with what you got. if this goes to 80, that's a gift. If it goes to 110 based on Pitchfork and MA multiplier, that is the best Christmas present any Marine could ask for. And I would jump at the chance of getting out anywhere above 130 to 160. That would be an insane trade from here. Last, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Technique Capital and Enzyme.Finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocations. Here's that 1-inch allocation. I'm not patting myself on the back. It is what it is. And it was up, 100% today. You can sort this by, daily change or whatever. You can see what we're holding and where. You can also see all the trades I make in the trades tab down below. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.